Crypto markets remain under pressure from macro headwinds. On-chain metrics show that squeeze risk remains, but volatility hits year lows as DeFi options keep seeing inflows and flooding the street with short-dated vol. All this and more in this week's Crypto Insight. So crypto this week, what's been happening? So we kind of managed to touch just below 40K at the start of last week, which was, kind of the target really that we were thinking that we could reach. We staged a bounce up to, 44 and a half. And that's this kind of fizzled out, right? It's kind of this sort of downtrend that's been in place, kind of contained that rally. So not amazing price action, got your little dead cat bounce, but then faded. So the general macro landscape is such that it's making it quite difficult for crypto to really rally right now. Yeah, because those fears around tightening monetary policy, don't really play well into the story on crypto. Okay. And obviously, with tech being so weak, crypto seems to have a bit of correlation to that. So, we couldn't really stage a meaningful recovery despite bouncing off 40K. Okay. And then if you look at the chart, you can still see there's potential for a final push lower to eke out maybe a local low, because you kind of count this. If this count is right, let's say 1, 2, 3, 4, 5, then in that 5 down, saying that's the end of the 4, then, that should have a 5-way count within it, which is a 1, 2, 3, 4, and could be a 5 now. So kind of looking at just simply those waves, we may be in the 5th of this final 5th, which could take us below this green support line somewhere. And then you look at the momentum indicator. Well, that has kind of reached a low level down here last week, bounced a decent amount. And if we could then make a low in price without making a low in momentum, then we may be in a position to stage a more meaningful rally because we get that bullish divergence in momentum. That is often, a nice signal to catch a rally, basically, right? So I think that setup is definitely there, that we've got a bit more work to do to the downside before this correction is actually complete. Okay. So that's Bitcoin and what the chart is saying on Bitcoin. If you then look at Ethereum, the Ethereum chart in isolation doesn't say a lot. Again, we've still got this key area around 2,900, which would probably coincide with that leg lower again in Bitcoin if we were to get there. So if you do have some dry powder, probably an okay entry point for some longer term purchases. If we look at the spread, ETH Bitcoin spread, we see that whilst we broke down that first support, we held the second pretty much at 0.074. We've then rallied back up to the first and failed, and we're heading back to that lower support. So that would be the support zone we're trying to hold, which will be key to whether ETH kind of does hold around those 2,800 levels, or if it motors lower down towards closer to 2,000 at some point, right? That support level in this spread is probably going to be an important determinant of that, I would imagine. Okay. Now, one good thing about ETH is we're seeing the net transfer volume off exchanges. So it's gone from into exchanges to off exchanges, the net transfer volume, which tends to be more hodling behavior and a bit more bullish longer term because people are happy to take their ETH and store it off exchange. If we go over to the on-chain metrics for this week, what are we seeing? You've got this percentage of transfer volume in profit. Okay, so this yellow line, has gone back down towards 40% of volume in profit. So it's trying to have a look at all the stuff that's traded in Bitcoin and whether it's in profit or not. Okay, and the idea is that in this range between 40% and 65%, if you're at either end of that range, that's giving you some sort of contra indicator, basically, right? It's a bit of a oversold, overbought type indicator. So we've seen, when we've got as low as 40% historically, that happened at the COVID bottom, that happened again down there in the kind of July lows, and we've got there again. So that would indicate that we are potentially reaching a point in Bitcoin where enough P&L destruction has happened that we can bounce from there. Okay, that's the idea. Okay, if you think that metric has some value. Now, which clearly, you know, the Glassnode guys see it as having some value, which is why they put it in their newsletter. Now, there's another one, which is the realized loss. And this is, again, trying to keep an eye on who's throwing in the towel, basically, right? And how much money is being locked in, how many realized losses are being locked in. And obviously you see spikes in the realized losses when the market drops down aggressively. And it can signal that there's been a bit of a capitulation, that now we can kind of, the market's been cleaned out and we can stabilize. So you have these kind of run-ups, these deleveraging events where you've got these pink arrows showing you that your peaks, you get 1, 2, 3 peaks basically in these realized losses, the middle peak being the greatest one. And if you can see that, that's kind of happened again, right? Where you got a peak, you got a big peak in December when we broke those levels. And now you've got this peak again recently in this latest leg higher. But those peaks, those peaks on either side of the big peak in the middle are not as much. So you're getting some divergence, right? You're not getting as much need for capitulation because the big capitulation already happened back in December. Okay. So those are the sort of things I'm seeing on chain, right? They also look at the futures data. They look at some of what the derivatives are saying. On the futures side, we mentioned this last week, that on Bitcoin, futures open interest is still pretty elevated, right? So it was actually at the highs. And because we got that bounce from 40K to 44K, we would have stopped out a few shorts there. So you've seen that drop off, that yellow line drop off in terms of futures open interest, but it's still pretty damn elevated if you look back over like a year or more. Okay. So you can see that's quite elevated. You can also see that perpetual funding rates are negative, which doesn't happen very often, but when that happens, it's the shorts. You can see that the shorts are pressing their shorts. Okay, so there's an imbalance between longs and shorts. So it's telling you open interest is still pretty elevated. Short interest seems to be dominating. Perpetual rates are negative, perpetual funding rates. Then you look at the volumes, you see futures volumes have been sort of trending lower for a while. Okay, so what does that mean? It means liquidity in the futures market is not maybe as good as it was, right? You've got a bunch of shorts stacked up. You've got liquidity not amazing, given volumes aren't that high. And then the last thing, this chart on the right is talking about crypto margined futures open interest. Okay. And that's been steadily on the decline as well. So when you had that up at 70%, that was in the April, May time, that was a lot of fragility in the market, right? When you have your futures trade on crypto margined with crypto, like you do on Deribit, where anyone who trades on Deribit knows, right, that when you start losing money, the value of your collateral is also going down, and that can lead to faster liquidation, basically, right? So effectively, you're like doubling up on your leverage, right? Because you've got a delta to your collateral. Your collateral isn't fixed in dollar terms, right? The more money that flows out of those crypto margined exchanges onto cash margin, the less of an issue that is, the less fragility you have in terms of, getting liquidated out of your positions because the value of your collateral is dropping as well. Okay. So I would argue that chart shows that the downside risk gets slightly reduced when crypto margin accounts are smaller, basically. Yeah. So that's what we're seeing on the futures side. And that's what would be my takeaways from it, basically, right? So potential downside risk getting taken out, a bit of short open interest still around, room for a squeeze if we get the catalyst, right? I would say there's fuel for some violent upside should a catalyst emerge, okay? And it suggests that the downside, we may not see a mass panic driven by leverage needing to stop out on the downside. So that could mean that we see orderly, grindy type price action on the way down, like we have been kind of seeing, and a bit more violent on the way up. All right, now let's move over to the crypto vol analysis. So first things first, what is the realized? So the realized vol, we had said that, vol had kind of been crushed last week on the back of this new sort of DOV narrative, right? Everyone's front running it. Everyone comes and sells vol in the lead up to Friday because that's when the vaults sell their weekly options effectively. Okay. So you had Bitcoin on the left, realized vol was kind of staying elevated as we was trading down to that 40K area, and implieds were coming down anyway, because that was on the back of the flow that was anticipated. And now you've seen the blue line roll over and actually go back below the implieds, right? So realize is kind of caught up to what implieds were already saying. Ethereum had a bit more pronounced realized over implied spread, and that's kind of reverted back. So they're, again, it's slightly below, but it's kind of in line. So Ethereum Gamma, the price of Ethereum Gamma, i.e. the implied vol of that short end of the curve, is quite efficiently pricing the realized right now, right? Realized and implied are kind of equal. Okay, they got a bit out of whack last week with people anticipating the DOV flows, but now the realized has come in to be in line with where that Gamma is trading, okay, which is at around the kind of 60 area. Yeah, so that's what we're seeing in realized, and in general, realized are just at the year lows on whatever metric you want to look at. They're hugging the lows of the year. Okay, so realized really getting decimated in crypto right now, which is in part due to the fact that the street is longer Gamma than it would be on average normally. Okay, because of this new supply. So you can see the implied vols across all maturities trending lower. We've got the 7-day to 6-month maturities here. 6-month went from 75 vol to below 70 or around 70. I think it's below 70. Front end went from similar 70 down to lows of even sub 50, right? It's bounced a little bit here in the last 2 days, but you can see that pink line, which is the weekly vol, got absolutely obliterated. Okay. Another nice way of seeing that is through term structure. But before we show the term structure, let's just have a look at what it looks like on a 1-year basis. Okay, so looking back at implied vol on a yearly basis, that one's just going back a couple of weeks, but on a yearly basis, we can see that, short dated implieds are through the lows that they got to in April last year, and longer dated, like 6-month implieds, which is the white line, is pretty much bang on the lows that it got to April last year. So these are low levels of implied vol that we have not seen for a while. And if you think this is a mean reverting asset, certainly the longer part of the curve, then dipping your toes into some Vega here doesn't look unreasonable, given how far we've come down. Yeah, I mean, it makes sense that the short end should come down if there's so much supply of Gamma, but the 6-month vol arguably is now starting to look quite attractive, given that, we think there could be some moves in crypto on the back of either a load of adoption coming in or Fed rate hikes really creating a big macro risk off. Yeah, so that's the idea. So Vega potentially offering some value. Then if we want to have a look at the term structures and what they're saying, obviously they've all collapsed. Should be no surprise. We've already seen that. You got Bitcoin on the left. You've got Ethereum on the right. You can see the front end of Ethereum has gapped down particularly hard. I mean, Bitcoin has too, to be fair, but then the chart at the bottom, you can see here, this is the implied volatility, the short end implied volatility on both Ethereum and Bitcoin. And you can see there was a large spread between the two, Ethereum in blue, Bitcoin in pink. There was a large spread between these two back end of last year. And then you've seen this acceleration lower in Ethereum to compress that spread. So that spread was as wide as 20-25 vols at one point, has now got to sub 10, probably closer to 5 vol spread right now. Yeah, and that's been on the back of all of that DOV selling of Ethereum volatility, short dated Ethereum volatility. And then if we look at skew, skew basically normalizing a bit, back mean reverting. It had caught a bit of a bid in terms of puts as we were testing that 40K area, which is very normal, particularly in the short end. So you had weekly skew at like 5 vols over for puts. This time last week, that mean reverted back towards flat, has been kind of oscillating around and is about 2 vols right now. But if you look at the 6-month skew, that's kind of stable around 0 basically, right? So saying the market's quite neutral in its expectations about where the gap risk, where the tail risk lies right now. Me personally, based on what I said earlier, I actually think there's more I think crypto grinds lower. I don't think it crashes lower from this point particularly. Obviously, if we get this really wild macro risk off move, then that will impact crypto. But in isolation, I don't think crypto, the setup is for a really big crash right now. I'd say a decent pop on the back of the shorts that are out there is more realistic. Now, when I say a decent pop, a move from 41K to like 48K, I consider that a decent pop. I'm not saying we're going to fly back through 50K that easily, because I think the headwinds that are out there for the broader market are also headwinds for crypto. I just think structurally, crypto is at a place where it may have a little bit of a squeeze coming. So those are my thoughts. In terms of flows, right? What have we got in terms of flows? So Bitcoin flows, quite a lot of stuff going on, actually. If we look here, we've got the things we were seeing in the market. So we had January Bitcoin calls trading, okay? Sort of the 44K, the 46K calls, opportunistic buyers basically of those calls early last week as we were testing those kind of lows. You can see that in the pink, right? In the pink color coding, you see these clips here, but they were sold back out pretty sharpish, right? And you can see that here where you've got these most traded options. You've got the 44, 48K, 46K calls that traded in like 2,500 each. But the change in open interest over the week in those calls isn't very big. So people bought them, but then sold them back out again because the rally didn't really materialize. And they knew that the gamma sellers were coming at the end of the week. So you don't want to just sit there and watch not only you lose on time decay, but you watch your implied vol get pummeled basically, right? So if you're going to use short dated options to express a breakout, express a delta view, if you get your delta view or you don't get your delta view in 2 or 3 days, you need to be quick to get out of it because you know this wall of gamma selling is coming that's going to push the short end down basically, right? So the tactical buyers of short dated options, because vol is cheap, need to be pretty quick to get in and out of those options. Otherwise they can lose quite a decent amount of money if they don't do that. Okay, so that's what the sort of flow we're seeing speculatively. You're also seeing an interesting vol trade, right? Was to sell February strangles. So this is the 40K, 50K strangle, and buy 3 times the March 30K, 70K strangle. Okay, and you can see that here. We've got the March here, big pink bars, your March 30K strike and your March 70K strike. And then the February is these gray ones, right? You've got the 50K strike here, and you've got this one here, the 40K strike. So those grays were being sold to finance owning those wings in March in bigger size, right? And the rationale there and why you might do that trade as well, you look at the term structure, you have February here, you have March here, you think the curve's going to steepen, so March vol is going to go down, okay? And so that's why you're doing a short February, long March. And what you also think is the market might just stay range bound and not really move. So I don't want to be long at the money options. I want to be long the options that will really come into their own if the market moves. So in the March, you're buying the wings, right? Rather than buying the local region around here, in the March, you go further out, you buy the wings, and those wings have some nice properties, right? They kind of shrink themselves down if vol goes down, and they grow in Vega exposure as vol goes up. That's something we call convexity, and that's what low delta out of the money options contain. And as a vol player, if you think vols are at like year lows and could rally quite a bit from here, you want some exposure to that rally. And the way you get that is by owning out of the money wingy options, basically, right? So that's the trade there. And that's why the guy's done that trade, okay? And then the last trade of note was this June trade, okay, which is a call spread. Another way of thinking about it is, well, vols come down a lot. I want to own it, but I want to own that middle part of the curve, not the front end that's just decaying really badly. But even though vols come down a lot, I don't see the upside in crypto being that huge now, given all the headwinds. So what do I buy? I buy a 40K strike call and I sell a 60K strike call in June, right? So that's a call spread being bought in June in some decent size. And it's, again, not a bad way to express your sort of medium-term bullish view on crypto, but in a relatively efficient, good risk-adjusted way, basically, right? Risk-constrained way, because in a crash, you're only going to lose your premium, right? And I believe the premium on those call spreads wasn't too bad. They're like 20 wide. And I think the price of them was something like 5,000 or 6,000, basically, right? So it's still, you know, pretty much a 3-to-1 payout if you get that rally, which is quite decent. Yeah. And then Ethereum flows, nothing too exciting. We saw a March downside puts getting sold, 2,000, 2,500, 3,000 area in reasonable size. And then the last thing about flows is, like, you know, the protocols that do this, DOVs, that supply all this vol, are the likes of Friction, Atomic Finance, and Theta Nuts, right? My friends at Genesis Volatility have put on their newsletter the flows that they're seeing, the notionals that are trading. So be sure to check that out. But just the top trades of the week that I saw they mentioning were generally calls being sold in the likes of Solana 180 strikes, Luna 94 strikes, Ethereum 3,800 strikes. That was being sold, and it all expires this Friday, basically, right? And it's going to go again. They're going to sell the weeklies every time. So these protocols are systematically selling weekly vol in Ethereum, in some of these other layer ones. And these flows are likely, they're not monstrous. The notionals are, you know, in order of magnitude of 20 to 50 million per trade. But these things can add up. And the truth is, the more these things make money, the more money is going to fly into these protocols, and the AUM is going to grow. We've seen things like this happen in traditional markets where systematically selling vol works. It works for a long time. The AUMs grow and grow and grow and grow until it really doesn't work spectacularly. So just something to be aware of. I'm going to be commentating on these flows ongoing because I think they're going to be a major, major driver of crypto vol going forward. So I will be keeping you up to date on that stuff, but just, yeah, keep an eye on that and make sure, you know, you're aware of what's going on there. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.